Payday lending desperation. Let's have a look. Good evening everyone, Florian Heise here and welcome to another episode of Heise Says. I've got my stein of coffee and I thought we'd have a look at this article that was sent to me by a viewer. So millions of Australians falling victim to predatory payday lenders, the report tells us. Now, I thought before we'd go through this article, let's just pull it apart a bit and have a look at what they're trying to, or what essentially the fundamental contention that they are putting forward. Now, they're prepping you in this article to paint the people that have taken these mortgages out as victims and the lenders to be predators. Now, I'm sure, there's certainly the case where some of these lenders are acting in a predatory fashion, but let's look at what they're implying. So, the contention I'm putting forward is government intervention is necessary in payday lending and short-term lending. Now, we've already had restrictions in that. The reason that government intervention is necessary, that you want to bring the state in, is because the potential exists for predatory lenders to take advantage of people. And we've seen that, with debt collection using bankruptcy. We've just seen the whole Afterpay fiasco, and I've looked at that in another video. And just our household debt crisis that is growing more than you can imagine. But then the counter to that position is, should the state act as a parent? Should the state take a parental responsibility for a person? Maybe you should let me know your opinion on that in the comments. I'm concerned. I would argue that the slippery slope fallacy is not a slippery slope. Once you become dependent and lose some of your individual ability, it just goes from there. And then another opposition. Individuals should have the right to enter into a contract under their own terms. But, however, they need to have the capacity to do that. And I'd say education and intellectual capacity are two things that I would say, just off the top of my head. And there's 5 things that are required in a contract. There's an agreement, an offer, and an acceptance. Consideration, which is the price of the commodity being exchanged. The intent, you need to intend to start a legal relationship. You can't, someone sending you an email and the text at the bottom of an email going, oh, if you don't reply to this email, I will fine you $50, or you need to destroy it. They can't do that. That's not a legally binding contract. They can't send you it and insist you comply with it. And capacity, you need to have the capacity to do it, the mental capacity to actually engage in this type of contract, and then, there are formalities associated with a contract depending on the type it is. So, that's the fundamental question that's being painted here. And as we go through this article, I want you to think about, should the government be involved? What level do you want the government to be involved? Is this simply a case of people not having the capacity to engage in these type of contracts? Let's have a look. So on a low income and with 4 children to support, one of them with autism, single mother, Kirsten White is doing it tough. So notice how they're painting a sad sob-story picture. In her home at Kingston on the outskirts of Hobart, every cent counts. So when the brakes on her car suddenly gave out, it was a blow to her budget. Miss White urgently needed $350 and a payday lender was there for her. So she needed the money. It looks like she had capacity to realize she made an agreement. There was consideration and intent. So, and a formality to it if it was a payday lender. She wasn't going to a bounty hunter or a bloody bikie. I could not think of any other way at the time to get my car repaired, she said. I was under the impression the payday lender was quite flexible with repayments. And that is a concern here. That's a concern. This is where the question of if the lender acted in a predatory fashion comes in. It depends on ensuring that the adequate information was provided to the person that engaged in this contract. When she was unable to meet the fortnightly repayments, her initial $350 loan spiraled into $800 debt within half a year. Ms. White believes the lender was deliberately vague about interest rates and she was taken advantage of financially. And this is why whenever you engage in any of these types of contracts or things, they need to give you information. It needs to be clearly labeled out. I believe they're making money off people who are in really bad times. They don't specify their fees clearly enough, she said. They wait until they've granted you the finances and then plunge you into the deep end. Out of despair, Miss White resorted to selling furniture and personal items to repay the debt. So here's the issue. I mean, if back here she needed that money urgently and she couldn't think of anything to get rid of the debt or to pay for it, and yet here she just sells furniture and personal items to repay the debt. I mean, that's not the nicest thing to do, is selling your things to pay for stuff when you need it in an emergency if you don't have cash. But sometimes you've got to do it, guys. You know, I've done it. Sometimes you just got to do it. You need cash, sell some of those luxury items you have, or those consumer goods that still retain their value. It's quite shocking when you realize how little things retain value, how much junk it is. In some ways, I think it's good to go through that, because it really hampers your ability to turn cash, even though it's fiat, guys. You can still convert it to useful things, into electronic goods or toys which lose their value instantly. So I was finding it very hard to put food on the table and keep up with my other expenses to the point where I needed to sell personal items, she said. I feel that payday lenders should be under strict supervision, perhaps having interest rates capped so this doesn't happen to other families. Well, I mean, they already have interest rates capped. They do. Miss White's lender has been contacted for comment. I wonder how they contacted her. So a growing number of single mothers are accessing loans. Now, I'll just wait for the MGTOW blokes to leave their comments. A new report compiled by consumer advocacy groups has found millions of Australians are falling victim to the predatory practices of payday lenders. Now, some people call them predators, and before, at the beginning of the article, they were saving her, the only ones providing her with the money when she didn't want to have to sell her goods. The report revealed that in the past 3.5 years, about 1.17 million Australian households took out 4.7 million individual loans. Now, this is what's worrying. Okay? In the past 3.5 years, over 4 million, nearly 5 million loans were taken out by under 2 million people, 1.7 million Australians. What does that tell you about the economy, about where the state of things are going? I mean, when I did my Afterpay video, I did a community post where I went to buy a battery and I photographed, there was Afterpay there, buy a car battery with Afterpay. But I guess if people if she couldn't scrape together $350, what else does that tell you in just the differences in capacity with people getting to that point? Gerard Brody from the Consumer Action Law Centre said people who opted for payday loans were those doing it toughest in society. There's a growing group that the report calls financially distressed, he told the ABC's News Breakfast program. They are more likely to be working, but perhaps with insecure employment, perhaps with higher expenses. Here's a question. What about peer-to-peer lending? I remember speaking to a mortgage broker where that was starting to take off. Has anyone got any experience with that? Please let us know in the comments as an alternative to this method. Would you peer-to-peer lend to someone at 5%? A small amount. Or maybe have an intermediary. Maybe I just thought of a business. Just over an app, peer-to-peer lending, instant money. Let's put something together, lads. So, it means they're the people tipping over into relying on payday loans and making the financial situation worse. She said some women now account for 23% of borrowers. He said women now account for 23% of borrowers, with a report showing the number of women using payday loans increased from 177,000 in 2016 to 287,000 in 2019. And 41% of those are single mothers, he said. Well, I mean, there you go. And interest as high as 400%. I mean, that's the thing, guys, this is what you're signing up for. According to the report, Victoria recorded 275,000 new payday loans between January and July this year, the most in any state or territory. New South Wales was second with 242,000 loans. So let's just jump here to trading economics. And we'll jump over here and we'll just look at our indicators for Australia. And I've referred to this on the chart before, just the delta change in consumer credit. We have a look here. We'll just go into a 5-year chart, even to a 1-year chart. Look at, 5 years shows it better. Look at that sharp jump there, guys. We'll do here, we'll do 1 year, we'll look at a line. You can see it from here. Look at that. That is a significant change. What's that telling you guys? What is that telling you? Are people depending on, well, it looks like people are depending on this type of stuff to make ends meet, to pay for unexpected bills. Afterpay is becoming more popular. It's, Australia's best export. I know it's not really our best export. I'm just saying that facetiously, guys. So the fastest growth has been in Tasmania, where Miss White lives, and Western Australia, with those states showing rises in 15.5% and 30.5% respectively between January and July this year. John Hooper from Tasmania's No Interest Loan Scheme, which provides interest-free loans to people on low incomes, said some payday lenders were not upfront about interest rates and deliberately advertised in lower socioeconomic communities. Some of the loans are transparent and others aren't. It's often not called interest, it's hidden in fees and charges that people pay, he said. Well, that's called Afterpay, isn't it? Afterpay is exactly like that. You don't pay interest until you go past the period. And what do you think people who are desperate and trying to balance their finances or depending on these things are going to more likely statistically end up doing? The interest rate on payday loans can be as high as 400%. That's outrageous and it has to stop. Mr. Hooper said lenders were acting quite recklessly and getting away with it because there were no caps on fees lenders can charge. See, there's a cap on interest, but there isn't a cap on the fees, I take it. He said federal legislation put a cap on payday loans and consumer leases, which allows consumers to rent or lease goods, has been stalled. So it's been stalled. I thought that came in with the cash converters and their share price took a hit. The federal government announced plans to tighten laws around small consumer loans and leases in 2016 following a review of the sector. We're now nearly at the end of 2019 and there's no legislation. How long does it take to get legislation through Parliament, Mr. Hooper said. Well, if you're trying to implement a cash ban, it doesn't seem to take very long at all, does it? Does it? It's funny. So they're stalling on, or not taking years to implement legislation to address this issue, which, could be quite predatory on people. I mean, 400%. I would honestly argue that loans need to be, even the fees and charges, all needs to be provided as a, this would be your percentage rate. It's the easiest way to compare products. Even if it's hidden in fees, say that it's a 400% loan over a year. They need to advertise everything at a per annum rate. Maybe they should even do that on their mortgages. But, maybe I'm just putting a tinfoil hat on. Keep us in the banking system, charge us fees, charge us transaction fees, and we'll deal with this later. You plebs just keep borrowing money with your food stamps. In a statement, a spokesperson for Assistant Treasurer Michael Sukkar said work on improving consumer protection was progressing. Government is currently considering public submissions on the final reforms to ensure the right balance is struck between enhancing consumer protection while also ensuring these products and services can continue to fulfill an important role in the economy, the statement said. Ms. White said she would never go to a payday lender again and advised others to steer clear from them. They are financial vultures. Do not go anywhere near them, she said. Well, okay, so there's the situation, guys. Claims that they're predatory, but it looks like, she met the requirements of a contract and she had the intellectual education and the capacity to make a loan. Do you think the state should be involved in limiting it? Is it an element of buyer beware? Or is this just going to happen repeatedly, more and more? Is this a market that we've discovered, for peer-to-peer lending on mobile phones as an alternative? Let me know what you think in the comments, guys. Where's it? I am an advocate for consumer protection, but I'm also concerned with government overreach. honestly, I would say what we need is consumer education. And this is just showing fundamentally that at our education institutions, we're not preparing people for the challenges involved in being an adult. What do you reckon, guys? Like, share and subscribe. Let me know your opinion on this topic. I know it's going to be an interesting one. Keep it nice in the comments. And I will talk to you all next time. If you enjoy my content and want to help me produce more, I do have a Patreon and a Subscribe Star. We also have an Amazon where you can make a purchase and I receive a small kickback, which doesn't cost you a cent, and also a PayPal if you'd like to transfer money that way. And thank you to the most generous donation earlier today. Take care, guys. Have a great day, and I'll see you tomorrow. Bye for now.